Well, here's one of my favourite topics when it comes to technical analysis, and I say that with some sense of sarcasm. And for anyone who's listened to the audio interviews prior to this workshop today, you know, it's a very common question. And for those who don't know, people who went to our website were able to send us questions, and those questions formed the basis of all these interviews we did. We did about 5 of them, about an hour each. And Dave would say, right, Stu, the next question was, John from X wants to know about this. A very common question, and of course we had to keep deleting them. A common question was, what are the best indicators to use? What are it? What are the best ones I should use, and what are the ones I should ignore? To me, let me go back to the start, I guess. We have a tendency to overcomplicate things. At the beginning, people tell us trading's not easy. So we think, well, obviously, if it's not easy, we need a complicated solution to make it work. Well, the idea of indicators and doing all these mathematical formulas and having all these lines do different things appeals to us because it makes it seem more complicated. And when I get on top of this and a grasp of this, I'm going to be a better trader. Then I think you get to the point where you realise, is this indicator really doing everything that it's theoretically supposed to do? And again, I'm going to rewind back to one of my first ever workshops. And you may have been in a similar one where someone has asked exactly the same question. I was at this workshop, it was, let's go back to maybe 1999 over in Adelaide. And a presenter stood up and he pulled up a chart, and guess what? Much to the interest of everyone in the audience, at the bottom of the chart were 2 indicators, you know, these lines doing different things. Well, I was as intrigued as anybody, and I didn't have to ask the question because there were 10 people waiting to beat me to it. Excuse me, so what are those indicators you have down the bottom of the chart? Well, of course, as soon as that question was asked, everyone gets their notepad and paper out and pen because they're ready to copy down the answer. And this answer is going to be everything when it comes to analysing charts and helping them make money. This is the answer, the solution right here. So, of course, the presenter goes, yeah, it's the RSI and the MACD. Pens are just going so fast over the paper. RSI, MACD. I don't even need to listen to the rest of the presentation yet, you know, or let alone continue my education beyond this point. I've actually just got the solution right here. If these indicators work for him, they're going to work for me too. So we go back home and we do some testing and we look at the RSI. Geez, I see why he really likes this. It really, I've got past all that now, and I believe indicators just are a complicated way of looking at price and drawing different lines, and to me, and again it's personal opinion only, I do not think they provide me any significant edge in my trading. That's just a conclusion that I've worked towards and got to, and I'm now firmly convinced in that. And in my interviews, if I may, sorry Dave, in my interviews I made it quite clear that that's not to say that you can't find an indicator which provides you an edge. And some of you here today might have a great attachment to a particular indicator because it really helps you. If that is the case, I think that's a great situation to be in because you have a method and an indicator which really provides you an edge. I personally have just gone through a bit of a search like we all do and just found nothing that really provided me any significant or marked advantage at all. So I thought, if it really can't provide me that advantage, what am I using it for? What am I, you know, why have I got it on my chart? So, sorry, Dave.
Well, I just wanted to make the comment as well, just to think about what is an indicator doing. If you think for a moment, what is an indicator doing? All it's doing is taking those 5 pieces of data that Stuart talked about earlier, the open, the high, the low, the close, and the volume, and it's running some sort of calculation based on that information. That's all it is. So it's interpreting the price data. So I think really, if you focus in on price data, you can get most of the information from there. And I know Stuart, and we've discussed this, I think we mentioned in the audio interviews that, you know, you can pull up a chart and you can almost say what certain indicators will be doing because you know how they're calculated, and it's just based on what price action's doing.
Yeah, that's definitely true. You could look at a chart and say, what would the RSI be doing here? And you could almost quite roughly draw what the RSI would be doing. Yeah, I agree with that. So again, it's just my personal opinion that I just don't place a great deal of value on indicators. And I mentioned my focus on the important things. One of my nuggets earlier, it was the idea that years ago when we didn't have all these indicators, because they didn't exist, because we didn't have the capacity to calculate them, people were still making money from trading. So it's obviously not a critical component and an essential ingredient to trading and trading well. It's obviously not critical. You don't absolutely need it. I've just put up here some examples. Again, these are just probably more commonly used. You go to traders club meetings or technical analysis meetings and someone will mention one of these, and you know, I won't make any comment on any individual indicator. It's just some of the indicators that are available. I just personally, I just don't use any of them. If moving average is not up there, because I do use the moving average, if you can call that an indicator. So I certainly do use that, but any of those ones there, I just don't use any. And I was speaking to someone before we even started today, and we're talking about a piece of software, and it seems like the main attraction of this particular software we're talking about was there's 120 new indicators from the last version. Woo, excellent, let's go and buy it. But that's not the critical ingredient to trading well, having new indicators, not at all. But it seems like there's that attraction. It's the making things more complicated, therefore providing us an edge in our trading that perhaps no one else has. So.
And also with indicators as well, just a small suggestion would be to not try and overload lots of indicators into your system, because it seems to be the more indicators that you add on, it's almost they end up conflicting against each other. A lot of the time you can, if you have a particular feeling about a stock or you think a stock's going to do something, you can find an indicator to justify whatever it is that you're looking to prove. So don't look at, applying loads and loads of different indicators after the fact, because I'm sure you're going to find something that'll end up, proving, oh yes, I was right. So just choose one or two, and then it comes back to that consistent approach.